They say that high tides raise all ships, but some people want to pretend that the rocks on the shore only kill inexperienced sailors or those who lack discipline and understanding. I'm Dan Fradenburgh, and this is for realestateisascam.com. I'm joined today with my co-host from Yeah But series, Greg Scully, and it is our sincere pleasure to have a new addition to our host lineup. It's Albrey G, and she's the perfect teammate for me because I'm fragile, I don't confuse easily, and I have the athletic prowess of a koala. Albrey, how you doing today?
Always a great day to have a great day.
Excellent, excellent. And Greg, you also look like you have the athletic prowess of somebody who picks up a lot of pencils. But how's your side gig doing as a Clint Eastwood cosplay actor? How's that going?
It's fine. It's picking up now that, masks are coming off and people are gathering again.
Okay, and there's a great reason why we are not just some random group of three people discussing real estate. And the reason why is that none of us are commercial real estate coaches, first of all. And coaches don't teach the way that we're involved. If you get a coaching program, they're not going to give you the blueprint for what we're up to. First of all, is there a realistic way to make it in real estate? And if so, what is just completely unrealistic? For me, I think it all starts with being believable. But what are your thoughts as far as the terrain if somebody's entering in right now?
I think it's important for them to surround themselves with individuals that meet their success points. I don't like to say pain points, that meet their success points. Once you know who you are and what you're trying to accomplish, you go out and seek out individuals doing what it is you're trying to achieve and ask questions. There's no question that you should not ask unless it's something, quite extraneous. But ultimately, ask questions. Find out those locations. Like there's a ton of free meetups, free opportunities before you just say, I'm going to join a coaching program. Unless you just need a tax write-off, so it makes sense to join a coaching program. So there's other alternatives and incentives there. But at the same time, the one thing I'm noticing is that a lot of individuals that are actually passive investors are signing up to be operators of these coaching programs, and they're not realizing it until 6 to 8 months down the road after they've spent significant amount of capital that could have been into a deal. I'm that individuals I like to learn while doing, as opposed to passively learning while going back to a classroom. You already have a degree, or maybe more than one degree. So if you're going to spend those type of funds that I see a lot of individuals spending, make sure it's something that adds value to you. And more importantly, make sure you surround yourself with individuals that are doing what it is you want to do, and they're on the journey that you're trying to go on. So ultimately, find out what works for you, the timeline you want to achieve those goals once you set them, and then go and find individuals that can help you along that journey, that add value to you, and you add value to them. Because I hear a lot of individuals saying, oh, well, I don't have this or I don't have that. You don't always have to have money. You can add value in other ways. Not everyone's great at marketing. Not everyone's great at, deal sourcing. Not everyone's great at underwriting. And the one thing that I see most individuals having the biggest issue with after the deal and the debt, it's the equity. So even though you don't have the money, you probably have the skill sets to raise equity or to assist with the possibility of. And that's where a lot of these coaching programs start. It's educating, and in the process, they're also receiving equity to deploy into deals to acquire assets that you may have the opportunity to invest in later, if not then. Otherwise, it presents you an opportunity to learn while doing.
So when I take what you just said, I think a huge part is self-awareness and just like knowing what you got going for you and what you have to offer, and being aware that, you can't just come along and say, all right, I'm here, give me equity. And that's it,
no,
right?
Absolutely. Yeah, absolutely. Because what a lot of individuals find out real quick after they deploy their initial equity to be a part of that coaching program, I don't think they get as much value after, because ultimately they've ran out of equity or deployed the equity that they actually had to deploy into something, unless they had an SDRA or something of that nature to passively invest in another asset or whatnot. But they're no longer liquid for a lot of them, is what I'm seeing. They've disposed of their liquid. Now it's like, how much value do you have? Because they need more new students coming in to continue to do what they need to do. Now they're having a ton of affiliate opportunities that are still passive income for them on top of the capital that you're providing. And the reason I know too is because I'm receiving a lot of phone calls, individuals reaching out to me, asking me for guidance regarding certain things. It's not that coaching is bad. I'm all for a great mentor. Just make sure it's something that truly adds value to you, what it is you're trying to accomplish, and along the journey you're trying to take. So your journey is not everyone else's journey. There's a lot of free information out there. You just have to decide what's the information you should keep and what's the information you should absolutely run behind.
Beautiful. Greg, do you have anything, any thoughts on the terrain right now of commercial real estate as far as people coming into it? Because like a lot of what we're talking about here seems like about expectations that don't really match reality. Got any comments on that topic or something that Albrey said?
Yeah, I mean, like the coaching thing, I'm a product of coaching, so I'm not anti-coaching by any stretch of the imagination. I came in at a much lower price point than what a lot of the people are charging now, and I think Albrey makes a good point that you can, expend a lot of expense in real dollars to get into some of these programs that could be, maybe actually better deployed in trying to find a way to actually convert them to equity. They can be an accelerator. They can give you some structure. They can more quickly help you define what your role is. If it's a well organized program and it goes over all the aspects, you could be like, well, money raising probably not in my wheelhouse. Maybe something else over here is. So what was your question, Dan?
Well, it's just the terrain right now, as far as is it an uphill? Well, it's more than just an uphill battle, is really what I mean. It's like, but are there realistic expectations? And if there are any unrealistic expectations, what are they specifically? Like, it sounds like Albrey was pointing out that there are much better places to deploy capital than just in education. At least you shouldn't you shouldn't put all of your capital deployed in just the coaching part, because you're going to need an opportunity to take at least like an LP position. Like a lot of people like to learn from something like that. So do you have anything more, or you want to move on to the next question?
And a good coach is going to let you know that too. A good mentor is going to let you know that this is your last. Do not put it into this deal. Do not put it into this opportunity.
Yeah, excellent point. Because I was in a couple of programs and was reaching out to another program, and at the end of the call, he's like, "I'm not sure you need this. It sounds like you've got things pretty well under control, and you might end up seeing a lot of duplication." So, yeah, hopefully people are being authentic with what they can provide for you and aren't just looking to, get the cha-ching.
And it starts and ends with you. That goes back to when I said, what is it that you're trying to achieve for you? And I think a lot of individuals talk about their why all the time. And their why always has something to do with everyone but them. What's your why? And I rarely hear a why that's talking about you, not your family, not, they go to Disney next weekend. That's you that's at the house. You're not going to Disney with them. So who are you outside of your family, outside of your why for your family?
Greg, let's actually start with you this time, because we started with Albrey last time. You're in operations now, Greg. So this is one of those things, like how people say you should. Some people say you should never invest in people's first deal. And you being an operator now, starting off as an owner and then getting into that, that's one of the things that I want the audience to understand, that decision and why they actually might want to do that. Whereas like in some situations, people are like, well, I don't really want to be an operator. I just want to accumulate the wealth. I know that you want to have the understanding and the confidence that you can turn a deal around, but can you talk a little bit about that decision to have a stint in operations right now?
It's just for growth mindset. I mean, we're in this for the long game. This is what we do. So in order to, maximize not only profits, but just maximize our knowledge of operations, we felt bringing it as in-house as possible makes the most sense. It was a control thing. It was trying to control the clock type thing. I mean, property management for us is not a profit center. We're actually looking for the value to come at the disposition rather than the ongoing management fees. So it's just a way to hopefully make the project as efficient and profitable as possible. I mean, that was our motivation. I mean, somebody's got to run these deals. Somebody's got to be full-time.
Right, exactly.
I don't go to a part-time doctor.
Yeah, part-time doctor. Yeah, I love that. I love
Yeah.
that. And but you're the long-term play, if I were to lay it out like a chessboard, it's you recognize that being the KP is where it's at long term, as far as like that's how you're going to, amass a lot of wealth rather than doing just some small time stuff. It's going to be piggybacking on other people's deals and making your equity work for you. Or at least that's how I interpret the play that you're on right now, and I summarize it for the audience just because like that's not something you walk in and go, oh, okay, well, this is a reason why I have to do some operations for a little bit. Am I completely off base here, or what do you think?
For like the monetary motivation, or
Sure.
I mean,
Well,
yeah,
the
if
long
you're running
term.
syndications, the
Mhm.
GP gets a disproportionate return to their equity investment. The
Mhm.
trade-off is you don't have to do any of the work. So, I mean, it's the exchange of value, like Albrey's talking about, is what are you bringing to the transaction that other people are willing to feel confident in and invest in you and a project together. So,
Mhm. Yep. And a couple months ago, I noticed that people started having this saying, it was like, well, I don't want to buy myself a job. I don't want to buy myself a job. And that's one thing that they do it. And the thing is like, the reason why I'm putting you on the spot here, Greg, is because I think you're actually doing it for all the right reasons. And like your decision makes absolutely perfect sense. And I encourage all sorts of people to do that, if they can pull it off for a balancing act of whatever it is. But like that's really what I wanted to emphasize there. So is there anything else, or should I see what Albrey has to say?
uh, we can hand it over to Albrey. Let's hear
All
what
right,
Albrey
so
wants to.
so so Albrey, I was talking about full timers. That comment of just like, oh, I kind of wish I didn't quit my job. Like when I heard you say that, and I understand there's a certain degree of tongue in cheek, but what's your response for some of the things that Greg said?
No, I completely get where Greg's coming from. There's a lot of part-time doctors out there that operate like they're full-time, but you don't know what facility they just came from, etc. Now, to go back to referencing when you made a mention of full-timers and part-timers and things of that nature, I was making a reference to the whole get out of the 9 to 5 rat race that you hear all the time. And a lot of individuals hear that and they prepare to quit their job. Like they literally have start dates and end dates of when they plan on quitting their job because they heard someone say get out of the 9 to 5 rat race. Well, last I checked, everyone's in a rat race. The question is, what type of cheese are you after? Which goes back to what is it that you're trying to achieve? You need capital, period. So if you're going to leave the capital, just like that full timer did, that got to a certain point to where their passive allowed them to leave their capital so that they can continue to be in the business full time, understand and or overstand what it is that they're saying to you and where they're coming from with it. They've gotten to a point to where they can be full time. That doesn't mean within the next 6 to 8 months you leave your full time job to be full time in the business. Now, if that works for you and you have some systems set up to where you can do that, absolutely, I'm all for that. But you do need capital because last I checked, in order to raise equity, majority of the accredited investors had to earn a certain amount of capital per year ongoing to do that. Those are individuals that don't have the opportunity or don't want to be full-time. They want to be passive. And we end up finding that a lot of them end up being operators on the back end once they learn, hey, why am I continuing to do this? So like that doctor or that lawyer, that whoever that accredited investor is, regardless of their actual occupation, they're starting off part-time. Whereas there's a lot of, operators that also have full-time jobs that are considered quote unquote part-time. But to me, part-time is full-time is overtime. That's how I personally operate. So therefore, if you have a W-2, it doesn't mean that you can't be a full-time operator. It's just that teams, real estate is a sport. It's a team sport, especially in commercial real estate, which is what we're referencing. So ultimately, before you just say, I'm going to quit my 9 to 5, or realistically, the individuals that are making accredited investor money, they're not working 9 to 5 anyway. They're working overtime.
Mhm.
Just being completely honest with you. Even in commercial real estate, that's overtime work. Like Greg said, property management, that's like the least, sexiest opportunity of a job to have because they don't make a ton of, funds, but at the same time, they generate a ton of cash flow for the operators when they do their job exceptionally well. So ultimately, it was more so me saying about like who would I invest with? That's why I like 506Bs a lot of times, because I get to actually know the operator. They have to get to know you. That's almost a must. Whereas with the C, you can just send it out there on social media and anyone can look at it. So
Mhm.
ultimately, and I know a lot of accredited investors as well, that's what they prefer sometimes when you start doing the percentages, the 506Bs. So ultimately, it's a matter of, once again, what works for you. But before you say, I'm going to go full time, if you're new to the space, make sure you have an excess amount of capital, an excess amount of a lot of things, or some systems in place before you just quit your job. So when I made that comment about full time, part time, it was referencing the quote that I hear all the time: get out of the 9 to 5 rat race. Like,
Mhm.
figure out what that is for you, as opposed to that person that made that comment. Because there's a lot of W-2 money that's coming in as LPs and our co-GPs that's taking down these assets. That's the part that you aren't being told. And that W-2 money is allowing those operators to do what they do. And then that's when they ultimately have or start their coaching programs that allow them to continue to make revenue or capital that they can deploy back into an asset or acquire an asset, either with their students or additional students or other individuals just in general.
I love that. And you mentioned the 506B. So just you in the audience, if you aren't aware of the terms, so 506B is when you do a private raise. So you're not allowed to publicly say, hey, I've got this opportunity. You're not allowed to do that. You have to have the prior existing relationship with especially the non-accredited investors that you're involved with. You can still have accredited investors in a 506B. You can have a whole whack of them. But the real problem, and Greg, you mentioned about how you're a product of coaching. I also think that I'm a product of coaching as well. But I mentioned near the beginning of the video, I had a weird way of getting my education in, and it was because I was doing all the tech for the coaching and the live events and all that sort of stuff. So, and then I was also responsible for when we'd have a securities attorney or whatever kind of attorney, and they'd say, oh, well, say this, and this, and then we'd offer something and we'd throw it by the attorney saying, okay, is this okay to post? I'd always look at the difference and say, well, what's being taken out? What's being left in? What's okay and what's not? And I'll always be grateful for that opportunity. But what is revealed to me is the big problem of coaching in general, which is that if you make it illegal to advertise to investors if they're not accredited, then you're going to have people who coach first. They probably are actually more motivated to do the actual real estate deal with you than they are to do the coaching. But the thing is, they just can't say, hey, advertise with me. So I know that was fairly dense. Does anybody have any comments, something they want to mention on what I just said?
I think there's some element to coaching that you are getting people to pay to partner with you.
Mm-hmm.
Mhm.
Yep. I have no qualms
Uh,
about that. I agree. Yep.
but I'm not also saying that that's necessarily
A bad thing.
a bad thing.
Well, I think that's the other thing too. It's one thing that clicked in when I was in my mastermind was realizing that if you have the deal in hand and you go to one of these coaches, you can circumvent the paywall. And when I say paywall, I mean that usually on digital coaches or anything like that, what you're trying to do is you're trying to say, okay, well, here's the free thing, you can't call me yet. Here's the cheap thing, you still can't call me yet. Here's the, moderately expensive thing, we can hop on a call and you can ask some questions individually. And then there's some sort of like 5-figure coaching program where there is some one-on-one access, but the coaches are doing that just because that's how you maximize the income. Whereas if you actually have a deal in hand and you've got a good enough relationship and the numbers and the deal itself all pan out, then the coaches will welcome you with open arms, just as a partner, and you don't have to jump through all those hoops. So that's how I see the field, and I don't know if either of you want to comment on that, or if you have something to say.
I think it all starts and ends with, what are you after? What do you want? What do you need? What are your desires? No LPs investing in any deal because it's not something that's personal to them that they're after. Like, everyone's after something. Just be realistic and honest up front of what that is, on paper, on purpose. I say it all the time. and focus on the facts. Success is a habit, not a goal. Therefore, it's a choice. Like when you choose to say, this is what I want to do, go and surround yourself with individuals that are doing it. I'm a firm believer in profit's not a dirty word if all parties agree on the number. However, for me, I do everything with a purpose. And if it leads to a profit, once again, profit is not a dirty word if all parties agree on the number. But I started doing it with a purpose. And my purposes have always led to a profit. I just choose to go back and deploy that profit into areas with my time, with my resources, etc. Whether it's starting in college prep private school, having a sports academy, different things of that nature. So all of my passions play into all of the profits that I've made as well. And I just deploy them back into those opportunities. But ultimately, it starts and ends with you. What is your overall goal? What's the timeline to achieve those goals? And surround yourself with individuals that will allow you to do those things, and you add value to them as well. And that's the beauty of commercial real estate. It's collaboration over competition. And I see that when a lot of, individuals in the residential space come over. I think that's the toughest thing that they struggle with oftentimes, because they don't realize you're not taking down a 15, 20, $50 million asset by yourself. You're just not. I don't care how much capital you have. I don't care how much net worth you're worth. It makes no sense when debt is so cheap right now. Leverage the debt, period. But you have to learn those processes. And every day there's a form of coaching, whether there's payment or none. Even when we go to a meetup, those are almost like action groups for operators and passive investors. Because if you're a passive investor, you want to know how an operator thinks, so you know what questions to ask. Same thing on the other end. If you're an operator, you want to know what the passive investor is being taught, so you know how to have that conversation effectively with them. So there's coaching ongoing, whether you paid for it or not, whether it's an action group, whether it's a mastermind, whether it's free or not. You just have to decide what value you're receiving from it, how you can apply it, and what it is you want on your end or need.
I love you saying that. That makes me think of one issue. I mentioned the paywall a minute ago with coaches, but in a similar way, one thing that concerns me is secrets in general. Like, for example, it doesn't matter who you are. You don't want to be waving a flag saying, hey, these are the identities of my private investors. And so there's a certain degree of like, no, they're mine. And you're trying to, take possession of people. And that's not something that I'm a fan of at all. But as far as like what you listed off, I don't remember the full list of things that you said, but what if somebody is in the audience and they're saying, well, but people are too secretive for me to pull off what you just described? Do you have some advice as far as like getting on that track to finding out that information?
One, ask questions. And it goes back to a lot of these action groups. We end up finding out stuff half the time because some of us have dealt with it before or experienced. For me, I don't utilize the word issue or problems. I don't believe in issues and problems. I like to use success words or positive words because I want a positive outcome or a successful outcome. So I say situation, experience, and results and solutions. So ultimately, if you've never experienced that situation before, you won't have a solution for it. So therefore, once you experience or someone else can help you or assist you or add value to you with their level of experience for that particular type of situation, they're going to provide you with a solution to move forward. So ultimately, when you say, if you don't ask something, they're not going to answer something you don't ask. That goes back to surrounding yourselves with individuals that do add a value add for you with what it is you're trying to accomplish and or achieve. You just have to get to the point where you learn more, you're more educated on something so you can ask the right questions. That's why a lot of times I always ask, whether I'm going out to eat or I'm done with the meeting, I always leave my last question is there something that I have not asked you, should have asked you, that you did not explain or I missed and potentially interpreted? And ultimately, I just left it on your table to tell me something and things that I did not ask you that you should have told me. So if I found out later that there was some obvious things that you should have gave me, I literally gave you an in and I gave you an out, and you still chose the out. So therefore, you're not for me. You're not adding value to me. You're devaluing me. So if you don't value me, I probably will not be partnering with you.
That's really something. Greg, do you have something to say about the secrets, getting to the secrets? You've done your agency debt, you've got deals under your belt. Do you think that the entire process was really intuitive, or do you think that it is the sort of thing where you're just not going to be able to even get started without being guided, or what do you think?
Yeah, I don't think there's really any secrets. This is a really mature industry. There's a lot of
Absolutely.
people doing it. There's a ton of education out there for it. But it things change dramatically when you get an individual property on an individual tax parcel in a specific market with its own dynamic tenant base. And uh, that's where things change. It's like, okay, I got this thing under contract. We've closed on it. Oh shit, now we got to run it.
Yep, that's when it really gets.
That's when, yeah, exactly. And that's kind of where I think there's a lot of gaps in coaching on operation side of it. And it's not that it's impossible to teach that. A lot of it can be around like systems and processes, but it's very broad because each deal is so specific. It's its own little business.
Yep.
So it's hard to teach that stuff. So a lot of the secrets are just getting to the point where you're actively doing something. Just
take action.
Mm-hmm.
Mhm.
But I'm not, there's not really any secrets.
Especially in the commercial space. Like it's gonna come out where the bodies are buried, as we say.
Oh yeah, exactly. Yeah.
We're gonna find out where the bodies are buried. It's gonna come out, especially when you're talking about millions of dollars. We're not talking about 1 million, we're talking about 15, 20, 50. Like we're talking about a lot of funds. So the secrets are gonna come out if there were a secret. Meaning we refer to it as where the bodies are buried. We're gonna find out.
I love that because you actually gave me a fantastic segue that I was struggling to figure out. You mentioned the millions of dollars. We know that when you're dealing with commercial properties or real estate in general, you're dealing with big numbers, but that's the equity, that's the net worth big numbers you're dealing with. You're not dealing with like, hey, I have a stack this high of $100 bills that came in this week, and I'm going to get another one that's just as big the week after. There's a lot of money involved, but usually it's not until an asset gets flipped or something like that that it actually is like realized and in paper and all that sort of stuff. But I want to bring it up because income disparity sounds like wealthy people have $1 million salaries, and that might be one of the secrets I think that are glossed over. What do you have to say on that one, Greg, as far as like where should people's expectations be? And keeping in mind what Albrey said as well, which is that if you want to be doing big deals, then you have to be focusing on that. And if you're focusing on little tiny things, then you're not going to have as much success in that way. But what comes to your mind when I mention that, Greg?
Income disparity, or box it in a little bit more for me. What are you asking?
Yeah, I'm saying more about the perception that, okay, I'm going to get into real estate and then my cash flow all the time is going to be enormous. Whereas it's more of a game that people who get into this business full time, what's going on is they're living modestly, but they're accumulating equity or capital, whatever you want to call it, like that position that's deployed inside the actual asset. They're accumulating that at a faster rate than most people with a W-2 do.
Yeah.
And that's really the game. So they might be living like very modestly, like 40, 50K a year, something like that. Whereas like in their previous job, they might have been doing like 6 figures or something like that. But at least they're not paying as much income tax and they're accumulating a lot faster. I'd say that's one of the secrets, but I don't know if there's really anything more to comment on that.
Yeah, I mean, I think you've hit it there. It's a long game. GPs, depend upon the size of the deal, generally actually don't make a lot of cash flow along the way. A lot of it is fee income on the front end and disproportionate returns based on waterfalls at the disposition. There's not a lot in between. I know for us, we're pretty modestly living But yeah, our balance sheet has grown much faster in the past 5 years than it ever did over my 20-year W-2 career. So I think that aspect of real estate gives you that balance sheet net worth growth that can be accelerated relative to W-2 stuff, especially if you're more active in it and are getting some of that disproportionate returns for being a deal sponsor or whatever your role is on maybe a general partnership. But yeah, it's not, I think most of us are chugging along, doing our thing, and are on a good path to build up some decent wealth. But of course, as social media defaults to the outliers. And so there can be an impression that
a deal is
it's a get rich quick type thing, or like it's easy, it's not easy, it's a pain in the ass sometimes. Lots of situations already come up.
Like I said, a deal is closed when it's really not. You're still raising on the back end.
Yeah, well, right, exactly. Yeah, it's like, oh, what do you mean my insurance that you quoted me 3 months ago now is now going up $8,000 because you asked me the wrong questions? Yeah, it's like there's always something going on.
Right. It's a mature industry, as you mentioned before, and there's a whole lot of overhead. And coming from a digital side personally, like it's particularly obvious. Here I am surrounded with all these website names, and like the annual cost for supporting a website for me is tiny. It's as long as you're not aggressively buying ads and spending on marketing. It's a very, very efficient way if you can actually get the traffic to make the sales and make that all work. But as far as where inflation is going right now, because we were talking about accumulating that equity, like building that wealth just with the time. But with inflation where it is right now, I know we've got six-figure earners that are really worried that they're not going to be able to retire. And Albrey, you keep 1 foot in commercial real estate and 1 foot in a few other things, including like a day job. So is that something that you want to give some insight to the audience to, as far as like where that whole balance of strategy works with a job and investing on the side, or as a strategy as a whole?
Well, for me, it's about passions. Like I've never had a job. I've only had passions, and I just happen to have quote unquote W-2s that pay me for those passions. But everything that I've ever done is everything that I currently love doing. So I don't view my W-2 as, a job. I view it as a passion. And my W-2 plays into my passions as far as I get to know how the inner workings take place in government. How when you acquire a particular asset of land, how you can get an in-kind gift, tips, things of that nature. So once you start overstanding how permits work, once you start overstanding how certain things take place, when you get ready to do your businesses or invest in a particular asset, you already kind of know what to stay close to, what to stay away from. Just because you're looking at analytics and things of that nature and statistics of what CoStar might tell you, that doesn't mean they have someone that's literally boots on the ground in that area. You literally have to do your full-fledged due diligence on that asset. Like yesterday, I was looking at a rent audit. That rent audit said that the average rent income was X amount of dollars. Whereas what they didn't say from that broker was that there was only 2 units that had that income, but it was over the course of 2-year lease. That's not a unit we can turn within the next year or two, so it affects our business plan. So having those insights and realizing before you go do a property tour that you should truly do a rent audit to make sure that what's being said, if you choose to go in at a lower entry point or asking price based on the asking price that was offered, you have an intelligent conversation that you can have with that broker on why you're coming in at this amount, even if that means you schedule a call. But as far as inflation goes, for me, I think it's a word. Ultimately, it's how you choose to receive it, how you choose to view it. But I don't look at it from that perspective. When someone tells me, hey, gas is the same price as milk, well, I don't do dairy, so I'm not concerned about the milk prices. At the same time, that affects them, not me. So what might affect someone else might not affect you. You just have to, once again, it goes back to, it starts and ends with you. Your journey starts and ends with you. What works for you? What does not work for you? and be intentional with whatever it is you're doing, how you're doing it. Just like this is also an educational platform. Like when we talk about being an operator, it's great to be an operator. At the same time, the part that's not talked about oftentimes is you're pretty much working for no compensation outside of the acquisition fee or the acquisition management fee, and that comes from the raise. So after that, for the next 2.5 years, depending on your business plan and your exit plan, you're not receiving compensation because of what Greg talked about with the cash flow. It's not until you either cash out, refi, or you sell the asset, or both. So ultimately, you're still operating and are working a job that's not a W-2, and you're not being compensated. So why would I leave my capital or my capital sources to do something when I still can do it because I have a risk mitigator? Whereas I'm not sure if many do, but I personally have a risk mitigator to where I don't lose money. And that's a fact. I'm just being honest with you. I've never lost money. Let me knock on something. No, what the bar brings. But my risk mitigator has done a phenomenal job of making sure when funds go in, I only see an increase. I've never seen anything less. Same thing with when you leave funds in a bank. You're getting what, 0.01, maybe even worse than that return. So even if you get a 6 pref, it's night and day, or 8 pref, 9 pref, whatever the case may be, that's better than you leaving funds in the bank. So instead of me leaving funds in the bank, I put it with my risk mitigator because the velocity that I'm seeing on those funds is night and day. So I'm not concerned about quote unquote inflation because it's not impacting me the way it probably is impacting others. And that's a mindset shift and a heart set shift that a lot of individuals have to take for themselves of what that is. And what are you trying to achieve, and who do you need to surround yourself with to achieve those goals?
And that job, you could view it very similarly as a low overhead a low overhead business. Sure, like your car payments cost money, the place that you actually live in costs money, their expenses you're going to have anyway, but it sure beats, like having expenses of say like $100,000 a month on a building that you're responsible for, and then if lots of things go wrong, then you still owe that 100 grand even though you're not. I'm just throwing around numbers around there too. Greg, did you have? Sorry, Albrey.
Keep in mind too, when we're talking about an asset, even if say a 50 unit, just keep it simple. A 50 unit, if 5 people move out, the other 45 people are going to front the bill for it. Whereas if you're in a single family home, that's a little different. If you have 5 homes, 2 people move out, you're fronting the bill for that. So there's a ton of leverage there as well. It's just a matter of how you choose to look at it and how you choose to receive it, because everyone has a different set of lenses and they receive information differently.
Right. I was doing tech for a single family company for about 6 years, and that's why I didn't make the jump. Is because I was going like, yeah, there's no way that at that time, like $250,000 is depending on one tenant, and it's like, and if you're not a local, then how easy is it for that to turn wrong? So that's a pretty that was what was going through my head, and then once I was going, okay, well, if I can partner up with people who have some sustainability in a commercial deal, that makes way more sense to me. Greg, it looks like you have something else to say.
Well, the inflation thing, yeah, it's a metric, it's a macro number. My inflation is going to be different than Albrey's because maybe I do buy milk. And I say I don't care sometimes, like I don't care about inflation, or I don't care about the larger economy. And what I mean by that, the shorthand for that is the economy doesn't care what I think about it. So there's little I can do about it. Read about it. It's interesting. There may be some correlated effects based on inflation that can affect our tenant base when there's perceptions of how much disposable income they think they have or perceive to have, or there's just a limit to the amount of money that people can spend on certain things, including housing. So I mean, yeah, I pay attention to it, but we were talking about this the other day, knowing the average depth of a river does not give me much information about the river that I need to cross directly in front of me. I need very specific knowledge about what I'm actually facing, what is immediately downstream, how far can I swim before I drown, and can I get out? And yes, some previous information looking upstream is there a dam up there that releases on a scheduled basis that I should know about? great. But there's little I can do about the water that's already coming down. I just have to figure out how to navigate it. So
Being proactive instead of reactive, and understanding.
yeah, exactly. It's
You control what you control, but have a plan of action in place that it's kind of like having an exit plan for an asset. It needs to be flexible because things happen.
oh yeah, yeah.
You communicate with your investors.
Mhm.
Yep.
And that's what I think gets lost in the conversation is a little bit, especially when we're doing all this analysis and projections and pro formas and stuff. You know, once you own a building, it turns into people.
Yep.
I mean, there's that number gets converted to a living organism basically.
Mhm.
And
That's the biggest asset, the people.
yeah,
The building wouldn't be
exactly.
an
And
asset
it's,
without the people. The people are the
Mhm.
biggest asset.
you know, spreadsheets are very linear.
Mhm.
The world is not very linear.
Right. I love how you
But
say that.
over the course of time, and you know, if you can keep it,
Mhm.
you know, keep it on the road, sometimes you're going to be a little closer to the shoulder than you want to be. But you know, ultimately, if you do hit your exit and you make it home, okay, fine. You know, it
Good
could be a
stuff.
little bit of messy along the way. Who knows?
I love that how you're saying that they turn into people, and you know me from the digital side. Like the same goes with your audience on social media. You know, I think before you have one, you just think it's like, okay, well, I just want to be able to post and then get like this many likes or this many comments. But no, those are people that you interact with, and you get that credibility and that currency with them, and that's what ends up making it all work. I think there's some similarity there.
Mm-hmm.
So, but you were mentioning specifics, and I want to thank you guys for joining me today. As far as specifics go, Greg, I know that reaching you over LinkedIn works. Same with Albrey, but Albrey, if you, maybe you can start off by saying like how to get hold of you. Who's the best person to reach out to you? You want to go ahead?
If you're a phenomenal individual, feel free to reach out to me. I like adding value. I like receiving value in return. So the best way to reach me is LinkedIn, Albrey G. That's A as in Apple, L as in Larry, B as in boy, R as in red, E as in Ed, Y as in yard, the letter G, green as in gorgeous, great.
And good stuff as well. Also, it stands for G, but not exactly, which is Greg. So, Greg, how about you? People want to get a hold of you. People want to reach out to you. Who's the best person to reach out to you, and how?
Yeah, reach out on LinkedIn, Greg Scully. I don't know what my LinkedIn handle is.
I don't remember
Or
there being too many
I don't
Scullys.
know what it
And
is.
reminded me of mine. Don't worry about it.
Yeah. Or realwealth.solutions. That's what we work under. That's our website's got our podcast link. It's got a Calendly link for hopping on our calendar, either myself or the partner. So yeah, realwealth.solutions is kind of our hub.
Excellent. And I'm Dan Fradenburgh. This is for realestateisascam.com. This is where I switch my hat to the 506B1 because that's what I'm selling. It's a platform that helps you document your investor relationships for 506B compliance. Albrey mentioned that earlier, that you are legally obligated to know people before you let them know your private syndications. And what 506B.me does is, and you can try it right now, you can go to 506b.me, you can type in my name, you can watch the little short video where I'm talking about the things that'll tell you my level of sophistication, my appetite for risk, basically making sure that I'm not a Yahoo. And that's what I'm trying to help people out with, because I was a CRM guy with my agency and all that sort of fun stuff. And I found that that's one thing that there's not a really good solution to prove that you know who somebody is and they know who you are for that purpose. But once again, Albrey, Greg, thank you so much for this. And is real estate a scam? Albrey, what do you think?
It depends on how you view it. It's a you thing.
Greg, what do you think? Is real estate a scam?
No, but
No.
there's some scammers in it.
Exactly.
Yep, there's definitely some bad players. I'm always on the government's case, and I know it's all in their favor. But anyway, make sure you hit the subscribe button. It's over here on my left hand. It's this ugly red button, and if you click it, it turns gray. It's much better because YouTube pays for these videos. But anyway, thanks again. Thanks for joining me. See ya. Bye.
Always a great day to have a great day.
Excellent.